working trade levels. You keep working trade at levels. And, you know, we sold this 40 on gold a number of times here, and we're still short gold. And we recognize that things start changing. Now, I haven't taken a single penny from 40 to 50, not a single penny. I didn't get a single trade on between 40 and 50 here. Am I bothered? Sure. But is it going to make a massive difference if I didn't get the trade on? Well, not really. I'll just get the next one, right? I'll get ready for the next opportunity. The point is, trading is not about the second you get past this, and we've had a few traders that can't get past this. Quite a lot of traders actually can't get past this. And it's the concept that you have a buy signal and a sell signal, and that's it. And you know, it's got to be 100% clear, and it's this. That's the sell signal. There's always an influence. I laugh at some of the retail gurus that talk about price action signals, for example. And they'll talk about a specific price action signal and they'll say, you know, this is the buy trigger. And you say, well, what happens if it happens 2 seconds before non-farm payrolls? Is it still a buy trade? According to your rules, it seems to still happen at 2 minutes before non-farm payrolls, but is it still a buy trade? Well, obviously you don't take it before non-farm payrolls. So in other words, what you're telling me is you use fundamentals as well. And all of a sudden, their technical storyline has just been busted, right? So in other words, there are technical stories. Liquidity is a technical story. It's about finding supports and resistance areas where there's liquidity pulling behind those supports and resistances. But it's also a story of levels. It's also a story of what kind of trader you want to be. Do you want to be buying into a pullback, or do you want to be buying into a bottom edge? Do you want to be selling into a pullback, or do you want to be selling into a top edge? These are all questions as traders. But the key thing is you just keep plodding away. You just keep plugging away at these ideas, these thoughts, these processes. And there's a lot of things you can decide to do. It's just about deciding which one it is that works and then building around that framework. You know, working the bids, working the offers, seeing the bids pulling, seeing the offers pulling, working that into your strategies, adding a bit of order flow then to start improving execution skills. And as you start improving execution skills, good, things start to become a little bit more definite. You start seeing opportunities. RGLs are a great way to start because RGLs tell you when you should be very careful to be a buyer, when you should be very careful, like this one now, to be a seller. If the RGL's gone blue, I should be very careful selling. So therefore, the supply here is not going to be sold. It's going to be a profit take location if I'm long. It may develop into a buy press with the supply pulling. You can see the supply's pulled up to 52 now. You see it? So the supply is still pulling above the top edges here. There's the supply pulling there. So you can see the supply is still pulling. Good. So we're now looking at this area here at maybe 45s, dealer's key. We'll maybe get a bit of buy-side opportunities to trade this if the value was agreeing, that the order flow was agreeing, if the storyline was agreeing. We might get a shot at it. We might take a shot at some buy-side trades. You might say, what, even at this price? Sure. What, was it a bad trade to take a sell trade here, a few ticks off the bottom edge? Was it a bad trade here to take a few ticks off the bottom edge or here? No, they were brilliant trades. You don't know what the top edge is until the top edge is decided, right? You don't know what it is. So you keep looking, you keep working in terms of what the market wants to do. The bias of the market is on that screen. Sell side bias here, buy side bias here. That's why we draw these two directional arrows. Because when we draw two directional arrows, it tells you we now have an RGL type situation. It's called a gamma flip price level. So when we've got two directional arrows, it means sell side below, and if it goes above, we're trying to work bids. Buy side above, sell side below. If it stays below, we work offers. If it goes above, we work bids. Nice. You can see it works. It works an absolute treat. And these are the trades we've taken today on gold using this process. So literally the only trade we haven't managed to get was the buy trade break here. That was it. Otherwise, it's been almost a perfect day on gold, hasn't it? Almost a perfect day. My sell in the Russell's doing well. It's broke nicely to the downside, 92 traded low. So my sell in the Russell looks healthy. It's kicking on. The oil did rotate off the 85s. It's held above 50 at the moment, but I'm not selling it and I'm not buying it. Oil for me looks as if it's dead. I'm not going to be trading oil, I don't think, anytime soon, guys. Don't think I'm going to be trading oil anytime soon.